This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
In Chapter 13, we deal with the disposal of one of the most commonly tested assets within our Taxation UK examination, and that is the disposal of shares. Now, as we have said before, if we're going to have a problem in terms of computing a chargeable gain on the disposal of an asset, it is usually to do with determining the allowable cost. You know how much you are selling an asset for. If you gift an asset away, you'll be provided with the market value of that asset, or indeed the means of computing that market value. But the difficulty that we face is one of determining the allowable cost. So what is the difficulty when that translates to dealing with the disposal by an individual of shares that he or she may hold in a company? Well, the main problem is this. That is, and this will be discussed, of course, within the individual lectures, so don't worry, you'll get a much bigger version of this in the lectures that are forthcoming. But your main problem is that you may now go out and sell 10,000 shares in A Limited for £100,000. You know how many shares you've sold, you know the sales proceeds. We need to now determine the cost of those 10,000 shares that have been sold. But of course, when we look at the history of acquiring shares in that company, we have bought shares not at one single point in time, where there is an individual and single figure of cost for those shares, but the individual will have bought shares in the company spread over an extended period of time. There may be 3 or 4 or more acquisitions of shares in that company, and those acquisitions have constituted possibly a lot more than just 10,000 shares. We are now selling some, but not all, of those shares. We're back to a part disposal problem. But here we have our very special rules that deal with the identification that when shares are sold, which shares are sold. Are they the ones you bought yesterday, a year ago, 10 years ago, 20 years ago? Which are those shares to be? Well, in Chapter 13, we'll be introduced to and we'll demonstrate the application of the rules that you need to learn, by which you'll then be able to deal with any disposal of any shares. Now, the techniques and again the rules that apply on share identification, so far as individual disposals of shares are concerned, these have not changed between FA 2017 and FA 2018. 1819 tax year, of course, for which the transactions, the disposals will be made in your examination. There are no changes in the rules between last year and this year, and hence again, the lectures that you're about to see on Chapter 13 are those that were used for the 2017-18 tax year, the FA 2017 material. The only difference yet again that you will discover in terms of the examples that are used within the lectures as compared to those that you will find within your FA 2018 notes is the dates of transactions, where most of the dates that you're dealing with will be dealing, instead of disposals in the 17-18 tax year, or possibly even earlier, you'll be dealing with disposals within the 18-19 tax year. But the rules, the basis of the computations, these do not change. At the end of the lectures, you'll see possibly the most difficult of the areas to deal with, and that's where we deal with takeovers. The situation where I, as an individual, I go out and buy shares in A Limited. I know what the cost of those shares are. I know when they were bought. But then the disposal that takes place is not me going out and selling to a third party the shares that I own in A Limited, but what it is along comes another company, shall we call it VPLC, and is looking to take over A Limited. And therefore, not just I, but all of the other shareholders are now disposing of our shares to another company, this time VPLC. Now, if it was cash that I received as my consideration, it's an immediate and outright disposal. An immediate gain will arise, and we'll just do or use the techniques that are demonstrated in the first of our Chapter 13 lectures. But what we see on a takeover is where it may be a share for share transfer, at least in part. So I had shares in A Limited, I now acquire as a result of a takeover shares in VPLC. And what then happens in the future? I dispose of some of those VPLC shares. And that's the situation that you often see being tested when takeovers are being examined. Not actually dealing with the time of the takeover, but dealing with the subsequent disposal of shares that you acquired as a result of that takeover. And then again, you have a further and more compounded problem now. And that is, when you sell those VPLC shares, you will of course know the sales proceeds. The question is, what is their cost? Because now, not just in terms of the identification rules that you've already seen when dealing with share disposals, your new problem is, well, we're actually going out and selling off shares that we never went out and purchased at any given figure of cost. We had originally acquired shares in A Limited, and those were swapped for shares in VPLC. So how, on a sale of the shares in VPLC, do we work out their cost to compute then the gain that arises? As I've said, there are no differences in terms of the techniques and the rules that are applied between FA 2017, the lectures that you're about to see in this chapter, and what we will be tested on FA 2018 in our future forthcoming examinations. The only differences will be in terms of the dates of the transactions. Okay, I'll now leave you again to, well, once more, enjoy the contents of chapter 13.